Good afternoon, investors. You are now on KleverStock with me, Ninjaria, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates. Bursa Malaysia opened Thursday on a cautious note as investors track global geopolitical developments, including U.S. plans to curb Venezuelan oil exports and renewed rhetoric over U.S. interest in Greenland. At 9:09 a.m., the FPM KLCI slipped 6.30 points or 0.38% to 1,670.53 from Wednesday's close of 1,676.83. The benchmark had opened 2.61 points lower at 1,674.22. On the broader market, losers edged gainers 161 to 129. A total of 277 counters were unchanged, 2,082 were untraded, and 12 were suspended. Turnover stood at 133.93 million shares, valued at 68.48 million ringgit. APAC Securities said buying interest in selected counters could be supported by continued optimism in the global technology sector. In a note, it said, following weaker than expected ADP and jobs data, investors will turn their attention to Friday's non-farm payrolls for clues on the U.S. Federal Reserve's rate cut trajectory. Among heavyweight stocks, IHH Healthcare rose 3 cents to 8 ringgit and 61 cent. Press Metal added 2 cents to 7 ringgit and 13 cent, and Hong Leong Bank was unchanged at 22 ringgit and 76 cents. Maybank fell 6 cents to 10 ringgit and 62 cent. Public Bank eased 2 cents to 4 ringgit and 51 cent, and CIMB slipped 4 cents to 8 ringgit and 2 cents. On the most active list, Vantris gained 5.5 cent to 44 cent. Capital A edged up half a cent to 41 cent, and IGM climbed 7 cents to 2 ringgit and 81 cent. Tanco was flat at 1 ringgit and 20 cent. MMAG shed half a cent to 7 cent, and SNS Network dropped 3.5 cent to 61 cent. Among top gainers, Petronas Dagangan advanced 12 cents to 20 ringgit and 8 cents, while PPB and PJ Bumi rose 6 cents each to 10 ringgit and 68 cents and 1 ringgit and 53 cents. LGMS jumped 4.5 cents to 59.5 cents, and Frontcan added 4 cents to 4 ringgit and 19 cents. Top decliners included Nestle, which slid 1 ringgit and 70 cents to 120 ringgit and 30 cents. Petronas Gas down 12 cents to 18 ringgit and 26 cents, and Tenaga Nasional, which lost 10 cents to 13 ringgit and 60 cents. MISC fell 6 cents to 7 ringgit and 57 cents, and Westports eased 5 cents to 5 ringgit and 56 cents. Moving on to our local currency and foreign exchange. The ringgit opened firmer against US dollar and major currencies on Thursday, supported by stable regional foreign exchange conditions despite firmer US economic data overnight. At 8 a.m., the local currency strengthened to 4.0550 or 4.0680 against the greenback, compared with Wednesday's close of 4.0560 or 4.0610. IPPFA Sdn Bhd Director of Investment Strategy and country economist Muhammad Siddiq Jantan said that even as US economic data came in firmer, particularly the Institute of Supply Management ISM Services Index, the Bloomberg Asia Dollar Index remained broadly flat, indicating no meaningful risk-off shift away from Asian currencies. The US ISM Services Sector Purchasing Managers Index PMI rose to a 14-month high, with the services sector remaining in expansion territory for a third straight month in December. The index increased to 54.4 in December 2025 from 52.6 in November 2025, indicating an acceleration in economic activity. Muhammad Siddiq Jantan said at the macro level, the environment remains supportive for the ringgit. US long end yields have edged lower, while Brent crude has softened as the Venezuela-related risk premium continues to unwind, easing global inflation and energy cost pressures. He said that for Malaysia, lower oil prices reduce imported inflation and subsidy leakage, while softer US yields narrow the dollar's carry advantage. He added, as a result, Current price action in USD MYR reflects short-term dollar positioning rather than capital outflows, keeping the ringgit broadly stable with a mildly constructive bias through the session. At the open, the ringgit traded higher against a basket of major currencies. It strengthened against Japanese yen to 2.5876 or 2.5960, gained against the euro to 4.7350 or 4.7502, and rose against the British pound to 5.4572 or 5.4747. The local currency also traded mostly higher against its ASEAN peers. It edged up against the Indonesian rupiah to 241.6, 242.5, and strengthened against Singapore dollar to 3.1613 or 3.1717. The ringgit also firmed against the Thai baht to 12.9391 or 12.9906, while it was unchanged against the Philippine peso at 6.83 or 6.86. Now for some local economic news. The government will continue to monitor the global geopolitical landscape from an economic perspective to assess potential impacts on oil price movement, said Treasury Secretary General Datuk Johan Mahmud Merican. He said the government remained confident of meeting the fiscal targets set out in Budget 2026, despite ongoing global conflicts. He said, on the positive note, what we have done under the fiscal reforms undertaken by the government is that we have gradually reduced our reliance on oil-related revenues for fiscal purposes. There's no reason to believe that we should not be able to meet the goals of Budget 2026. Now, earlier, during a fireside chat titled Balancing Growth, Fiscal and Global, Johan said the government was confident of achieving its targeted fiscal deficit of 3.8% for 2025. He added that there was scope for a modest improvement, with the deficit potentially narrowing to 3.7%, subject to final fourth quarter gross domestic product GDP growth data. He noted that when we revised our growth estimate in July last year and revised it downwards to between 4 and 4.8%, that was very much based on the first half, where the growth was 4.4% for the first two quarters. Admittedly, third quarter growth at 5.2% was certainly a pleasant surprise. Assuming the momentum continues in the fourth quarter, we should hopefully be at the higher end of the range, maybe at 4.8%. By virtue of the denominator being potentially slightly better than what we had projected when we prepared the budget, there may be some potential for modest improvement from 3.8% to 3.7% fiscal deficit. Johan said his remarks were in response to a question during the session on whether the government was on track to meet its 3.8% fiscal deficit target for 2025. Continuing with some local news update. Fears that sweeping US tariffs would significantly disrupt global trade, including that of Malaysia, have so far failed to materialize, with economists saying that the outlook for 2026 appears similarly resilient. Economist Dr. Jeffrey Williams said pessimism surrounding tariffs proved misplaced in 2025, and Malaysia's trade is unlikely to be significantly affected by US tariffs next year. Citing data from CGS International Securities Malaysia's Berhad, he said 62.8% of Malaysian exports to the US were exempted from tariffs when measured by actual export value. He said more than 2,000 tariff lines relevant to bilateral trade were zero-rated or abolished by both sides, reducing Malaysia's effective exposure to US tariffs to just 4.6%. This is one of the best exemption performances in ASEAN and Malaysia. Also reduced tariffs on 6,911 products under the agreement, improving the overall tariff regime for both countries. Williams added that Malaysia External Trade Development Corp data for January to November showed overall trade rose 5.8% year-on-year. This was driven by higher imports, which increased 6.1%, while exports grew 5.6%. Net trade contribution to gross domestic product was also 10.7% higher than in the same period of 2024. Export to the US rose 13.9% during the January to November period, while imports from the US increased 7.9%. resulting in a 19.5% rise in Malaysia's overall trade surplus with the US. And nevertheless, Williams noted that the 2025 was a turbulent year for trade, with the balance briefly edging close to a deficit in May, where the surplus narrowed to just 760 million ringgit. In November, net trade fell 70% month-on-month and 58.8% year-on-year, while official figures for December 2025 have yet to be released. Williams attributed this largely to exchange rate movements, noting that the ringgit strengthened sharply from the October, weighing on exports in November. Front-loading of export also meant many orders had been fulfilled ahead of year-end. He said the ringgit is overvalued, which makes exports more expensive. This is the main risk to trade. First, the ringgit appreciation of almost 10% makes it difficult for exporters to compete. Second, the possibility of a sharp correction creates uncertainty for exporters. This is a greater challenge for 2026, the tariffs. We'll now take a short break, but don't go away. We will return shortly with more corporate news developments in Malaysia. Welcome back to the Midday Roundup. Let's continue with more corporate news developments in Malaysia. Johor is poised to attract billions of ringgit in high-impact investments from major Chinese companies including Jiangsu Longda, Wuxi High-Tech, Gotion High-Tech, Alibaba Group and ByteDance, following a recent week-long official visit to China. The Johor delegation, led by Menteri Besar Dato' Onn Hafiz Ghazi, held strategic engagements in Shanghai, Beijing and Hangzhou. The visit is expected to generate hundreds of skilled jobs while strengthening the state's industrial and digital ecosystem. Onn Hafiz said the mission aimed to position Johor as a regional hub for high-tech and digital industries, with the partnership set to create quality employment, support technology and skills transfer, and deliver long-term economic benefits for the state. During the visit, Jiangsu Longda Super Alloy Co Ltd, through its Malaysia subsidiary Singda Super Alloy Amsterdam Berhad, committed 900 million ringgit to Johor. It is expected to generate more than 200 high-skilled engineering and technology jobs. The investment will include collaboration with University Technology Malaysia (UTM), offering at least 50 graduate placements with exposure in Malaysia and China. At Wuxi High-Tech Co Ltd, a leading supplier of aircraft engine components to Rolls-Royce, Safran and GE Aerospace, the delegation explored high-value investment opportunities in aerospace manufacturing and medical implants, with an emphasis on sustainable technology transfer and training for local talent. The delegation also finalized plans with Gotion High-Tech Co Ltd for a state-of-the-art lithium battery facility in Johor, positioning the state as a regional hub for electric vehicle battery production and energy storage systems. Meanwhile, talks with Alibaba Group Holding Ltd in Hangzhou centered on AI, cloud computing and digital commerce expansion in Johor, leveraging the Johor Singapore Special Economic Zone JSSEZ to empower local SMEs and digital infrastructure. In addition, the delegation engaged more than 80 leading Chinese investors through platforms such as Friends of Johor. Up next, we have some business news update. Now, Bursa Malaysia Berhad yesterday clarified that the amount of remittance from derivatives levy to the Securities Commission Malaysia (SC) will be reviewed by the Commissions prior to the expiry of the 3-year period ending in 2028. The stock exchange said it will remit derivatives levy to the SC from the amount collected from the trading and clearing fees of the derivatives contracts for 3 years until 2028, as announced on January 5, 2026. In a Bursa filing, it said the company wishes to clarify that post-2028, the amount of remittance will be reviewed by the SC prior to the expiry of the aforesaid 3 years. It was reported that Bursa Malaysia has announced the new annual fixed regulatory fee applicable to the exchange at 28 million ringgit, pursuant to the fees regulations. Under the levy order, the levy rates applicable to the purchase or sale of derivatives contracts effected on Bursa Malaysia Derivatives Berhad included a levy rate of 37.5% of the clearing fee as specified by the derivatives exchange, to be paid by a purchaser or seller in respect to the purchase or sale of derivatives effected of the derivatives exchange. It also includes a levy rate of 37.5% of the trading fee as specified by the derivatives exchange, to be paid by a purchaser or seller in respect of the purchase or sale of derivatives effected on the derivatives exchange. And finally, wrapping it up, we have major corporate developments and deals across Malaysia. Hibiscus Petroleum Berhad said its Teal West field in the UK now has 4.5 million barrels of 2P reserves, up 32% from 3.4 million barrels after the drilling of a new well and data review. A1AK Koh Group Berhad has been appointed sole distributor for New Zealand instant full cream milk powder in Peninsula Malaysia by Uniraw Dairies and Food. Paramount Corp Berhad is acquiring 2.62 acres of freehold land in Putrajaya for 40 million ringgit as part of its land replenishment strategy funded via internal funds and bank borrowings. Vantris Energy Berhad has secured 2 work orders worth 1.4 billion ringgit from Petronas Karigali for offshore transportation and installation works on the existing contracts. And last but not least, Tien Wah Press Holdings Berhad is joint venture with Loom Chang Holdings and Loom Chang Tien Wah Property has signed an agreement with My Telehouse to develop and lease a data center on 1.61 acres of its land. Now that's a wrap for Midday Roundup with me, Ainun Jaria on KleverStock. Thank you for choosing us investors. Stay tuned for our upcoming live stream programs coming soon.